Hello, welcome back to Mining Network. I'm joined by Jose Vizquerra, the CEO of OIIIF Mining. Jose, nice to see you.
Nice to see you. Thank you very much for inviting us.
No problem. Let's kick things off very briefly. What's your market cap? What's your ticker? Tell us a little bit just about the company, where you're located.
We have a market cap of $140 million. Our ticker is OIII in Toronto, OIIIF in the States, in the United States. We have a project which is a development project with 2.3 million ounces already in measured and indicated. And we have already worked on a PEA, which essentially shows a net present value of $423 million at a 5% discount rate.
Before we get into the weeds of the projects and the economics, can you tell us a little bit about your background and how you got involved?
I was born and raised in Lima, Peru. I did civil engineering as my undergraduate. I did a master in science at Queen's University in geology, mineral exploration. Subsequently, finance studies at the Wharton School of Business. Started my career in Buenaventura, a company that was funded by my grandfather in 1953. And in 2011, I started working for the Osisko Group of companies in a company called Oban Mining, which subsequently ended up becoming Osisko. And from Osisko, we did a spin out of some of the assets that now I run under OIIIF Mining.
Let's talk about the assets at OIIIF Mining.
Yes.
Your main deposit. Can we just run through the actual size of the deposit, what the type of geology in terms of the actual host rock, and say, for example, you were meeting a geo, and you had to basically describe what's in the ground. What would you say? Well,
it is a very simple deposit in the sense that we have a package of mafic rocks and ultramafic rocks. And within the mafic rocks, we have found most of the deposit. These are essentially areas of shear zones where we have seen most of the mineralization in little veins that we have been able to put everything together in a pit. We began this with 1.6 million ounces, moved it to 1.8 million ounces. Today we have 2.3 million ounces, everything in measured and indicated category. And the concept here is to continue to expand that along strike. And along strike because we believe that we have to focus from a capital allocation standpoint of view in those ounces that are close to surface. So we could start adding those into what matters, which are the first 10 to 15 years from a discounted free cash flow. Everything after that, meaning by the underground mineralization, we know that exists, but right now we don't want to spend much money on those.
Just to clarify as well, so it'll be mining, but what's the sort of depth that we're looking at in terms of the drilling you've done so far? And what's the grade, and do you have a strip ratio already?
So we are drilling up to 400 meters right now. We have a strip ratio of 5.6 to 1. In some areas a little bit more, in some areas a little bit less, an average of 5.6. And we have right now 2.3 million ounces in measured and indicated category.
Let's go into economics. So if it's okay, can we go through the post-tax numbers in terms of your NPV, your IRR, what the capital cost is?
Our CAPEX is $256 million. We have a net present value of $423 million at 5% discount rate and at $1,450 per ounce, which was very competitive at the time and allow us now moving from PEA to pre-fees to adjust in terms of gold price and hopefully minimize that delta with regards to inflation. So we'll see where do we finish. But our CAPEX was $256 million Canadian.
If you look at a lot of, especially in North America, capital costs for projects of this size, over 2 million ounces, seems like a pretty good CAPEX. Seems fairly achievable. Why is it so low?
Seems low.
Yeah,
it does. Well, we are in Val-d'Or. We're in the middle of a city, an area that has a lot of infrastructure already in place, beginning by roads, railroads, airports, water, manpower, and at the end is a mining region. So I believe that is probably one of the reasons why we had these CAPEX. No?
In terms of, let's just go on to the expansion potential as well, if that's okay, because obviously usually 1 million ounces is sort of the golden, what everyone tries to achieve, right? You've absolutely smashed past that. Are you still looking to expand this project? You were talking about drilling further along strike. How much capital are you allocating to that? What's the drill program looking like? Are you working on that at the moment? Can you give us a bit more information?
Yes, we have invested a substantial amount of money to take this project to 2.3 million ounces. As it is a great start, and it is the foundation to build something. We will continue to do exploration to show the market that there is potential to go from 2.3 million ounces to 5 million ounces. We'll be talking a CAPEX doing that, probably around $15 million. Our cost of drilling is around $240, $250 per meter. Okay. So it's pretty competitive, so we can do a lot of drilling with that. And again, this is the foundation on where we're going to build, with the potential to move it from 2.3 million ounces to 5 million ounces by doing this systematic and disciplined exploration.
What about the metallurgy? It's all good, obviously, having the gold in the ground. Is it extractable? What's the processing looking like?
We have done substantial amount of work in the metallurgy. We have right now recoveries of around 96%.
Really nice.
And most of the recovery is with regards to the gravimetric circuit, where we're going to be doing CIP.
Can you talk to us a little bit about your partnerships? Because you do have exposure to quite a few other exciting deposits around the world. One of them that I follow a bit closer is Moneta, which have I think it's around 11 million ounces, and you own 27%?
27%, yes.
Could you just talk us about your partnerships and sort of where you have exposure?
Yes, so our focus under O3 Mining was to focus principally in these two assets, and all the rest of the assets was to look for the ideal partner in order to build and strengthen our balance sheet. And that was the beginning. So one of those things that we did was to team up with Moneta and build a partnership, and as you well said it, with these two assets, Garrison having a little bit higher grade, lower strip ratio, which would be the beginning of Moneta, and then the potential with the other resources that Moneta already had. We have moved from 8 million ounces to 11 million ounces, and if you ask me, we'll finish in 20 million ounces in the next year and a half. Yeah. And then we did the same thing with the guys from Cartier, with Philippe Cloutier. So they had a stamp in the middle of the eastern side of Val-d'Or. We had all the ground surrounding it. So we worked with them and convinced them to put it all together, because now Cartier not only has one single ore shoot, but he could have several ore shoots if he continued to drill step out and drill along our ground. Why we didn't do that? Because we didn't want to give the upside to them, but it was very clear as what we saw that if you start from their ground towards our ground, more likely we'll have more than what he has right now. Right now, Cartier has 2 million ounces. I would not be surprised that they will be able to find other ore bodies that will show much more potential now.
Okay, so just to summarize, I guess, so you've got over 2 million ounces yourselves, which is 100% owned.
Three, because we have another property called Alpha. So we have Marban and Alpha, and between both we have around 3.8 million ounces.
Wow. Okay, and then you also have quite a bit of exposure to 11 million ounces from Moneta.
Yes.
Another 2 million for the other partnership.
Yes.
Do you feel like the market has sort of taken all of that into consideration in terms of where you're valued at the moment?
No, I don't. Certainly, I do believe the market is efficient, and we're $140 million with $100 million in cash and equivalents. So clearly, the market is expecting us to show something different. I think what the market is really expecting is for us to show the numbers on the pre-fees. Yeah. The PEA, unfortunately, as part of a history in our industry, has never been given too much attention, because there have been a lot of them that have not been great. And I think in our case, moving from this preliminary economic assessment at 116,000 ounces rate of production, moving to now, by the beginning of September, which we're going to publish our pre-fees at $150,000 per ounce production profile. I think that will be a very important step, because the market will understand that this project, and as I like to call it, is a foundation, has really the right size to become an intermediate production company.
And something that we're asking everyone here at this conference is, over the last 12 months, as a management team, what are you most proud of in terms of the milestones that O3 have achieved?
A couple of things. First of all, we got Ecologo, our certification Ecologo. 2, our relationship with the communities and First Nations. We had our first 2 meetings with the communities, which were fantastic, and we'll continue to have those meetings, advancing the projects towards production. And 3 is a personal thing that I feel proud, which is that I have been learning French for the last 2 years, and I was able to give these 2 presentations in French, which represents respect to Quebec on what we do. And I think I'm one of the few mining CEOs that can actually now communicate in French.
Just looking forward, investors looking at this, what could they look out for, and what should they be looking forward to in the next 12 months?
I think they're looking, if an investor invests right now, he will see, or they will see, or she will see in the next 3 months an important milestone, which is the pre-fees. So at this point, I think any investor that invests right now, the downside is very well covered. The upside could be 20 to 30% on the basis of pre-fees. But if there is any strategic move around where we are, which already started with Goldfields buying Yamana, could see a much bigger upside even.
Awesome. All right, well, we'll keep an eye out for it, and thank you very much for your time.
Absolutely, my pleasure. Thank you so much for your time.